Stocks, as I mentioned, are a little changed ahead of the Fed meeting, but my next guest is preparing for just one cut this year. He still sees a soft landing in the cards and says stocks will work in that scenario. Of course, Michael Yoshikami is CEO of Destination Wealth Management. Michael, it's good to see you again. Welcome.
Hi, Cal.
Do you share Steve's optimism, or not Steve's optimism, but the findings in the latest monthly survey he told us about?
I do actually. I think that you're going to see a more resilient economy. I mean, we've been one of those folks that have been pretty adamant that we thought that there would be a pretty significant downturn in the economic strength. But I at this point, I can't find anything that would suggest that's the case. So, to me, the economy is looking pretty strong at this point, and I don't see any reason why the Fed would really rush in to cut rates if they don't have any real evidence that the economy is weakening.
So I'm going to read you an email I got from a viewer this morning who says, and I'm just going to use you as the avatar for people she's describing. She says, I'm tired of these super rich fund managers coming on CNBC and telling everyone that the economy is fine, consumers are fine, everything is not fine. And she goes on to talk about the cost of groceries, the plumber, the electrician, the roofer, the painter, the auto repair. I mean, speak to this anxiety that people have, that their lived experience is not being matched by the data. Steve is telling us about the performance of the market and so forth.
Yeah, well, first of all, I'm not super rich. That's the first thing. And then secondly, I can understand that. I think that all you have to do is buy a hamburger somewhere and see that you're being asked to put a 15 or 20% tip. I agree. I think it's tough for people out there. The cost of living. See, we're talking about economics rather the economic data regarding people's real experience. When everything is more expensive, it's just more difficult, right?
Yeah.
But that doesn't mean that the economy is a problem. It just means that purchasing power is shrinking, but the overall economic data looks positive and looks strong. So I don't discount your viewers' perspective. We hear that a lot, which is, the economy is softening, and why is broccoli so expensive? I think in the end, people are reacting to how it hits home for them. And I can certainly understand that. The data's nice, but in the end, it's what your personal experience is.
And you're saying you don't really think inflation's going to go down unless energy prices collapse, and today being a good example as they head higher on that.
Yeah, I mean, I don't see where's the headwinds. I just don't see it. I mean, the retail numbers, Steve just went over it. The numbers all look good. Not to say that your viewer isn't feeling pinched. Are energy prices going to go down? I guess they theoretically could, but Ukraine and Russia continues to drag on, and we have all the Middle East tension. Where is the catalyst for lower inflation?
Sure.
I used to think up until a few months ago that we had this massive lag of breaks in the economy that was going to screech the economy to a halt because of all past rate increases. I don't see it anymore. And so I'm maybe not desperately, but I'm definitely looking for signs the economy will slow down in any meaningful way, where the Fed then could cut interest rates. And as it goes right now, even one interest rate cut seems almost to be a stretch.
So, and I do wonder actually about the way in which AI plays into all of this, kind of the reacceleration we've seen in growth stocks and productivity and even investment as they build out data centers and electricity and everything else to support this. So bring that back then for us to kind of technology stocks and those big winners thus far. I mean, do you just stick with the market broadly? Do you stick with the leadership? What does that tell you?
Well, AI obviously is going to filter through the whole economy. You talk about all the job growth. There was just recently, I can't remember the name of the company, but there was just recently a manufacturing company that announced they were going to close factories and move jobs to Mexico. So you really do have this sort of counterbalancing effect. Investors are really faced when it comes to AI with really two choices, right? You either go pure AI, and that would be a company, let's say, for example, like an NVIDIA, that is pure AI or pretty pure AI, or you go with a company like, say, Apple, that's not pure AI, but probably will be AI in the next 20 minutes or 45 minutes based on their presentation. I think it's a matter of safety. If you look at the pure stocks, they have high valuations, and you're basically betting on just that. If you look at some of these other companies, they have other diversified business models, whether it's Google or Microsoft or Apple. So AI is going to be a part of their offering. It's not going to be the sole part. So if some of the hype gets kind of crashed out, you have some protection. So I think that's the investor to face with those two choices.
All right, Michael.